Hey guys, welcome back to the channel. My name's Max. The station's name is The Covered Caller. Here at The Covered Caller, I study 300 high-yield ETFs on a tick-by-tick basis from a data-driven perspective. Today's video is called The Good, the Bad, and the Ulty Part 2. Part 1 was last fall. All right, now remember, everything you hear today is not financial advice. Please consult a licensed financial planner. All right, you guys ready to get in the middle of it? Guess what? Everybody's favorite fund had their 2-year-old birthday yesterday. That's right, ULTY. Now, ULTY has been through a couple of strategy changes, 3 of them to be exact. So let's go back and review that really quick. Now, look at this chart. On the left in the pink is the chart, the total return chart of Ulty during the first strategy. And at the bottom is the total return of the NASDAQ, which we're going to use for Ulty's benchmark. It's not exactly Ulty's benchmark, but it's close enough to illustrate some of the stuff I'm trying to show you guys. All right, so strategy one. Strategy one was this ETF is going to sell covered calls on a portfolio of 20 to 30 high IV stocks. And they actually own the stock. They aren't synthetics, but the stocks were really high IV stocks. Things like Morrow, Bitmine Immersion, Trump Media Group, etc. Now, true to the Yieldmax brand, they go for the max yield by selling covered calls, and they don't manage payouts whatsoever. In other words, they give you all the money generated from the covered call income, regardless of what the underlying stock is doing. Some funds will just give you a portion of the money. So there's advantages and disadvantages to each way. But the Yieldmax chose stocks in the portfolio that are super high IV. They were often Bitcoin related, meme stocks, small speculative stocks. Now, the good news was with this build, the yield was more than 100%. But there's also bad news to a yield of more than 100%. Now, remember, my number one rule of high yield investing is a high yield is a tax on the future NAV upside of the asset, of the underlying asset, and oftentimes the future total return of that high yield fund. The dividends are paid out of the NAV, and as such, they deplete the NAV. So let's just say a fund that pays 50% annually, like maybe something like TSLY. Okay, well, if you want a flat NAV in TSLY, what you're really asking is that the underlying assets, and that would be TSLA, increase by at least 50% annually to offset the 50% that comes out for the dividend. So here's Max's high yield equation. NAV return equals total return of the parent asset minus yield. So to have a zero NAV return, otherwise known as flat NAV, you can use this equation and you can solve for it. But solving it for Ulty, that's paying 100% NAV at the time, or even a little bit more, it's really a bet that the underlying assets in that fund are going to be up 100%. If you want flat NAV. Now, so Ulty Generation 1 had almost no chance of recovering NAV after these huge dividends were paid out. You can see during the time of Generation 1, the NASDAQ did pretty well, but Ulty faltered, did not do well at all. In addition, Generation 1 ULTY was unhedged on the downside. As you can see, they struggled right out of the gate, and investors revolted, and Yieldmax, to their credit, changed the strategy, and along came Generation 2. Now, this one had basically, I think, the same stock selection strategy. What they did do, however, was they started hedging the downside on all their stocks they owned. So instead of just owning the stock and selling a covered call, they would own the stock, sell a covered call, use part of the proceeds from the covered call to buy a protective put in the stock. This strategy is known as a collar. Now, this strategy worked better than the prior strategy for a couple of reasons. The first of which is that the collar, the puts, did help stabilize some of the downside moves in the market. But the second and most important factor was the stock market went into a huge rally last summer. You know, after the April lows, the market was on fire for a while. Now, remember, covered call strategies are bullish bets. It's not as bullish as just owning the stock, but a covered call strategy at its core is still a bullish bet. Every high yield ETF does better as markets are going up and worse as markets are going down, or worse as their benchmark is going down. Now, Ulty also around this same time changed from monthly to weekly dividends. Some investors thought that helped stabilize the NAV also, but I disagree. It did make the NAV depletion look less drastic, as you had 4 or 5 smaller payments coming out weekly, as opposed to one giant payment being deducted on X day when it was monthly. So I do think it may be helped with PR. So next we had version 3. Now version 3 came along in late November of last year. Now this time the managers, they changed their stock selection strategy a little bit. They added in a few lower volatility stocks like Google, Amazon, and Nvidia. They also added in a third leg into their option strategy that helped keep the yield up even on some of the lower IV stocks, because Google's not known to have IV. So they added a third leg occasionally on some of the option strategies. The most important thing they did, in my opinion, was they also started putting some stocks in there that were based on precious metals, energy, raw materials. And what this did is it gave ULTY less correlation to tech and to Bitcoin than version 1 or version 2 had. Version 1 and 2 were highly correlated to tech and Bitcoin, which is great when tech and Bitcoin are going well, but not so great when it's doing poorly. Now, despite the third leg being added, the generation 3, the dividends have dropped. Generation 1 was 100+%. Generation 2, because of the addition of the puts, was around 80-85%. Generation 3 has been running about 75%. Now, these lower yields have certainly helped Ulty's ability to generate or to catch NAV upside. Of course, they still generate a generous yield at 75, but it's really helped their ability to catch NAV upside. And why is that? If you remember the high yield equation, it's because if you pay 75%, you only need the assets in the fund to be up 75% to offset the decay. Now, it's still a tall order, but it is somewhat easier. So let's look how ULTY has been comparing to some of their peers since the time of the last strategy change, which was late November. So I've made a chart here. Now, this is the past quarter. So this is from December 3rd. I pulled it yesterday. So it's from December 3rd to March 4th. It's the past 3 months. Now, you can see right here, ULTY is down 2.5%. That's not great, of course. It's not ideal. But let's talk about some other stocks that are their peers, some other high yield stocks that also use higher IVs and more sophisticated multi-leg option strategies. Well, we have K-Yield from Curb, which is down 6.8% in second place over the time. We have LFGY, which is down 12.5%. We have WPay from Roundhill. It's a nice fund. It's down 14.25%. We have Blocks. I have Blocks myself. It's down 19.3%. And then we have ULTI, which is down 20%. So I would definitely say that this build has improved Ulty's prospects. Now let's look at this. Here's something else that's impressive. Let's look at this pullback here in mid-December. And you can see ULTY was down the least out of any of these. During the pullback, it was down 4%, but some of these were down 9, 10, 12, 13, 18%. Even K-Yield, which is a good ETF, in my opinion, has a sound strategy. They were down about 5.96%. The thing is, though, then Ulty was still able to rally. When the market came back, they were in first place or second place, and Blocks passed them. And January came along, and then we had another big dip in early February. And in this big dip, ULTY once again held its NAV way better than these other competitors, peers of theirs. They were down 4.29, where K-Yield was down 13 just in that pullback. It was a nasty pullback. WPay was down 18. ULTI was down 19. LFGY down 23. Blocks down 27. And here we are today, and ULTY is ahead of all of these. So that's definitely better than before. Let's test it against some others. Let's see if it's ahead of the Qs. May not be. It is, but it is. It's ahead of the Qs. So think about that. This fund used to not be the greatest, especially generation one. And nowadays you have a situation where over the past quarter, it's beating the Qs. You can look at a stock like QQQI, great stock from Neos. That one is beating ULTY on a total return basis by a fraction, by, about 0.75%. So ULTY has definitely come a long way to be in the same ballpark with some of these other funds, especially the Qs and QQQI. All right, Ulty, the good, the bad, and the ugly. Generation one was ugly. Generation two was bad. The generation three so far has been much improved. I really think a lot of people would agree with that. Now remember, these ETFs aren't for everybody, especially not ULTY and lots of the other ones I showed. They're for a very small subset of the population. I think the most important thing to consider about Ulty or any high yield ETF is don't use it if you don't need income. In a covered call, the whole essence of a covered call strategy is you're trading current income for future NAV upside, and oftentimes, like I say, future total return. So if you don't need the income, there's no reason to make that trade. Now, these things can work possibly if you need an income. Check with your financial planner. It's a highly nuanced subject. It's a highly controversial subject. Like I say, and I'm not here to give financial advice. I'm not licensed to give financial advice, not trying to. I do like to look at the data, and I do think the data is much improved. Now, is it fixed yet? Who knows? I mean, it's still going to be risky, but with every successive strategy change, they've ratcheted down the risk. So I do definitely think it's safe to say it is much improved. Thank you so much for being here. Remember, if you'd like to donate to the station, you can always do so at paypal.me/Max Convexity. Thank you so much and have a nice evening.